Hi, I'm Victor. I like sharing my investing journey on YouTube and going through as an individual investor the companies that I own, invest in, analyze, and then make decisions whether I should buy more shares, hold, or sell those particular stocks. Today's company is Medifast. This is a company that I've recently begun to buy into, and Medifast provides a variety of health related foods and weight loss related foods, as well as programs and techniques for people that are trying to either lose weight on their own, be healthier on their own, or work with a coach or a professional that helps them get to a healthy lifestyle and maintain it. This is a high dividend paying company, and it also has a lot of interesting attributes to it. They announced their earnings yesterday, and I was able to update my analysis on the company, and I'd like to share that with you. I take all my investments through a process, and the process for stocks involves scorecarding based on 4 questions, followed by a decision whether to buy more shares, hold, or sell. Do I want to be in the industry? Is the company operated and performing well? Is debt less than 3 times EBITDA? And am I getting a discount on the stock? Based on the answers to those questions, I make a decision whether I should buy, hold, or sell this stock. So let's take a look at their income statement for full year 2022. First, the revenue has grown very well. If you look at their revenue growth over the last 5 years, they've grown 34% collectively over those 4 years. So that's really good growth for a company that's in the food business. Really good gross profit, much higher than a typical food company. So they have very good margins. Overall, their net income very productive at 143 million. So this is a company that is selling food products, but selling them at higher prices with better margins. Now, one thing that caught my eye in their earnings was the fourth quarter. The fourth quarter showed that the actual quarter revenue decreased 10.7%. They had a very good quarter the year prior, so the compare was difficult, but it's always concerning to see a company reduce that much revenue. So they got to recapture the momentum they had before going into Q1 for 2023. Everything else was kind of in the same theme, which was quarterly. I guess they had a great fourth quarter in 2021, and the compare was difficult. Their balance sheet looks really good. Cash, good balance of cash. But what I really focus in on is making sure that they don't have any debt. And if you look at their long-term liabilities, they have zero debt, which is great. Zero debt makes the company safer, gives them a lot of flexibility. I also see that they are buying back a lot of shares. That's also great to see because that makes that the remaining shareholders own a greater percentage of the company. Taking a look at the statement of cash flows, cash, again, over the last 5 years has gone up 34% consistently with revenue. It had positive cash flow or positive free cash flow, excuse me. If you compare cash flow from operations and then deduct the purchase of property and equipment, they had a very good cash flow rate, which I'll put into my model. I like to value a company based on the free cash flows they're going to produce in the future and discounting those free cash flows to today's dollars. Medifast made it easy. They provided all the information I needed. They provided their free cash flows for 2022, and the amount was 178 million. I'll take that amount and grow it over the next 4 years based on a growth rate of 7%. Then long-term growth would be a nice conservative 2%. They have a really nice cash flow yield, by the way, of 15%. That's a great cash flow yield. I'm going to discount those free cash flows by 10%, which is a nice high discount rate. And it's a smaller company. It's also in an industry where it could, easily have some bad news come up. So I wanted to go with a higher discount rate to kind of make it more conservative. Based on that criteria, I come up with a value of the company of $2.3 billion, but the market cap currently is $1.15 billion. So it leaves a discount available for me of 101%. So a really nice upside. Their balance sheet's in great shape. They have zero debt. So they're well below that 3x debt to EBITDA ratio. So I really like seeing that. Medifast had good performance over the last year and really over the last few years. Really good revenue growth if you look at the last 5 years. Free cash flow in 2022 was excellent at 178 million, which was 15% yield if you compare it to the market cap. The dividend is excellent, 6.56% dividend, and they have a very affordable payout ratio of 52%. They're a really good cash flow generating company. So I really like the fact that they can pay a high dividend and pay it out. Balance sheet's in great shape with no debt. For 2023, I'm expecting lower growth in that 34%, and I'm willing to accept that. This company generates a lot of free cash flow and a high dividend, and that's going to reward me as an investor. So my outlook is it's a good value stock to own. This is a nice underappreciated company that has a profitable business model and provides really good income. So let's revisit the scorecard. First, the industry. I definitely want to be in the food industry, and this company is operating and performing well. And I like that although this is a food company, they charge higher prices and have better margins. So it gives me a nice diversification within the companies that I own that are similar to this. The debt is zero, so well below the 3 times EBITDA. I'm getting a really good discount on this stock. So I really like the stock, and I'm going to be buying more shares of Medifast. Thank you for watching the video. I hope you found it interesting and discovered something new about Medifast. Keep in mind, I never make any specific recommendations to buy or sell any stocks. I like sharing my journey as an individual investor on YouTube, and I hope you found it interesting. Good luck investing in 2023.